it has been quite a good start for all of the Asian markets that are, trading right now.
And support for the Nifty Bank comes in around 45,645.
The Nifty's opened above 22,000. It's straight away off the bat, a gain of close to about 90 points.
Our target for the whole year for Nifty is around 23,000.
So for FY25, the addition is just in the range of 0.80 to 1 MMSCMD. That too will come from just one segment, that is CNG.
Incidentally, it is also coinciding with the good margins on diesel and petrol.
We had almost 350 crores of debt on the company, net debt. Now we're planning to repay almost 140 plus of that, part of that debt.
The Nifty opened above 22,000 and it's held on to all those gains.
Lastly, they also gave some positive commentary as far as their net debt, net cash position is concerned.
Foxconn कंपनी जो वेदांता वो तो उन्होंने पहले ही तय कर लिया था. हमारी सरकार तक तो 2 महीना भी नहीं हुआ था, तो पहले ही तय कर लिया था क्योंकि वो आया, उसको हमारी हेल्प नहीं हुआ.
RBI did not name this card network. We've been given to understand it is Visa.
Things are looking up, things are looking steady.
Well, that's the day so far, and it's been a busy day with markets actually looking pretty good through the course of the session so far. This is the last hour, closing bell, and we're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant, and with me, as always, my colleagues Reema, Surabhi, Nigel, everyone is joining in. Guys, hi, good afternoon. Who's got Friday plans? Nigel does.
A party man on the panel, but I'm just glad we've made it to the last hour. I think it's an achievement in itself, folks.
For the week?
The week has ended. We're at the last hour. That's an achievement. So pat on the back.
Don't we feel that every Friday? At least I do.
That's true. That's true.
Prashant is traveling tomorrow. He's moving to South India, is what sources tell me. And I'll tell Prashant I'm on the same flight.
I'm actually flying tonight, Nigel. So
okay, I'm on tomorrow morning then, but may not be the same venue.
We will see your pictures on social media.
All right. Well, absolutely. And the market, by the way, has been doing just fine, right? I mean, it's a pretty decent session. Gains are broad-based and nothing to really complain. And we are, the two of me. For a second, but the Nifty is, by the way, it's almost there, retesting previous highs. I mean, the all-time highs. It's been that way since the morning, and from there, from the opening levels, the market's added on a bit more. Bank Nifty gains, and we'll see whether it picks up or not, but gains largely fizzled out. We're in the middle of the range as far as the Nifty Bank is concerned. HDFC Bank, it's critical that sustains, if not gains, but that's also kind of flatlined. But at least it's not falling anymore after the lows it made last week. And it is not PSUs today for one day, right? PSUs are, they're not, some of them are even down. Indices are down. CPC index, for example, the last I checked was down 0.25%. It's autos, it's pharma, and it is real estate. Three pockets which are doing the best across the board. Reema.
And, despite that large savage sell-off that we had on Monday, we're still ending the week with strength. The Nifty is up 1.2% this week. The mid-cap index has gained close to about 0.5%. And we've been rallying now for the fourth consecutive session. IT has moved up in the last few minutes. The Nifty IT index is up 1%. And in that, the gains have been led by Wipro. So now Wipro is actually the top Nifty gainer. So it came out of nowhere. The start was flat for Wipro. But look at the way Wipro has rallied now. And Auto continues to hold fort in terms of a big sectoral gainer. M&M, Maruti, Bajaj Auto, all looking up.
Oh, yeah, absolutely. I think that's something that stands out. We got an emphatic answer from the market this week. Monday shakeout made a lot of you perhaps wonder whether we are in some kind of a medium-term top. But the way the bounce back has happened across the board, mid-caps bounce back, PSU stocks bounce back, I guess it's telling us that there's still plenty of momentum and it's a buy on dips market. And also, it's a nice relay that's playing out. Auto, for instance, was underperforming last several sessions. So the buying in auto is back. Reema mentioned IT. The buying in IT is back. Now, today, banks are not performing. You've got some of the major large cap names, including an SBI, by the way, which is struggling a bit right now. ICICI Bank is not doing too much. Reliance is, on the negative side. So if you pull up the contribution, these are the big boys that are not contributing. But because we've got a nice relay going on, some of the other sector is coming in. It's either PSUs or OMCs or IT or auto today. So the others are able to carry the market along. So I guess, Nigel, looking good and, nothing to complain, I guess, from the mid-cap perspective either.
Well, that's right. Mid-cap space has really been the space to watch. In the last few sessions, we've seen that the mid-cap index has done very, very well. And that recovery started from the day of the sell-off, actually. Intraday itself, we saw the mid-caps recover a few sessions ago. And that's held its ground, so that's pretty interesting. One stock that I had mentioned earlier today was Polycab. Yesterday, in the last hour of trade, we saw a big breakout out there. It was backed by good delivery, and there was long addition as well. And today, the stock was more or less quietish till around 1 p.m. But in the last few minutes, you pull up the intraday chart first, you'll see that the stock has bounced up. Yesterday, it took support at around the 20 DMA, as that graph is telling you. And from there, it's seen that dash. I think now it's on its way towards the 50 DMA, which is important. It's around 100 rupees away from these levels. But I'll want to watch that level. If we can get past that, then maybe technically, we could see a bit of an up move out there. The fundamental overhang is still there with regard to that income tax rate outcome. But for the time it appears, it's crossing some of these, these barriers of 20 as well as 50 DMA. So let's see how that goes. But let's get in some strategies. Rahul Mohindar joins us on the show. Hi, Rahul. Good afternoon. Good to see you win. Well, if you're a bull, you'll be very, very happy. Tell us, what is your strategy now? If you had a long position, what would you be doing? Take it into the weekend, or will you be booking profits and having a good Friday evening? And also run us through your stock picks.
We'll probably say take it home and, let's not just think about Friday evening. Maybe the next week is better. But having said that, what am I looking at in terms of levels on the Nifty spot? Next hurdle, I think, comes only a little closer towards 22,200. And, let's say we get past it, we could move to about 22,450. We've all understood very clearly that whatever's changed in the market in the last week or two has been short-term traction. The medium to long-term trend in most equities has been intact, including the index. Now, having said that, I think there's a little bit more of a comfort zone that I sense if you're looking at the indices alone in the Nifty Bank. I think there's more catch-up and there's more individual stock action, which I think could be coming in. So Nifty Bank probably is the one I'd peg if I had to choose to buy an index per se. So I think about 47,200 is a reasonable target to be trading in for. Keep a stop loss, on the Nifty Bank. And again, these are spot levels below the 46,100 mark.
Okay. Just some more stocks. Entero Health, which is the new listing of the day. This is a distributor of medical products. So they buy, medicines from the pharmaceutical companies in bulk, and then they will sell it to clinics, pharmacies, and hospitals. So the company is in a distribution model, and therefore the margins are on the lower side. But the company has been loss-making. The only time it turned profitable in its 5-6 year history was in H1 of FY24. So that is something perhaps which didn't go down too well with the street, that it's not got a history of making profits, though the company is confident about making profits going ahead. And the stock right now on day one is down close to about 7.5%. Even Jyoti CNC, this is a company, ever since it got listed, it's been on a tear. The issue price was, I think, 330. The stock doubled, but today you are seeing some profit booking settle into Jyoti CNC. So from the day's high, it again opened up quite high, but it's seen some profit booking. And Gujarat Gas is the other one, 6% lower on that, slumping on the back of a weak Q3. Sudarshan joins in with details on what brokerages are saying on the stock post their Q3 numbers. Sudarshan?
That's correct. So Gujarat Gas is under pressure after weak commentary in the analyst call. For FY25, the company has given muted volume growth guidance of 8 to 10%. In 9 months till now in FY24, company has done on an average volume of 9.20 MMSCMD. So for FY25, the addition is just in the range of 0.80 to 1 MMSCMD. That too will come from just one segment, that is CNG. Even on the earnings front, it was a miss. Revenue was at rupees 3,929 crore against poll of rupees 4,051 crore. Volumes were at 9.16 MMSCMD versus poll of 9.50 MMSCMD. Brokerages too are negative on the stock. Jefferies has an underperform call. Target is raised to 470 per share, but still 16% downside from current levels. It says volumes are impacted by further market share loss in Morbi. Volume growth guidance for FY25 is a dampener. CLSA has a sell call. Target is rupees 360 per share, which is nearly 40% downside from current levels. CLSA says management has guided for 10% volume growth and a unit EBITDA margin of rupees 4.50 to rupees 5.50 per SCM. On the valuations front, it says 30x P multiple is unsustainable and it sees risk of further EPS downgrades.
Prakash Diwan is also with us. Prakash, Gujarat Gas, how do you feel about it?
I do agree with some of the rationale that's been highlighted in some of these brokerage reports. It has not been too easy for them, and particularly when the demand side is weak, and you have alternative fuels that start filling the gap as soon as demand also starts perking up. It's going to be a bit difficult, but from a longer term perspective, I think as a sector, gas distribution definitely is something which is extremely positive. Remember one thing, all the headwinds that we can anticipate in terms of the Qatar arrangement with which Petronet LNG just struck into, that is something which is going to make sure that gas gets utilized and put to use in so many sectors, so many segments, that all these CGDs will start kind of sweating their assets much more. So that's where the real change will happen. At this point in time, the quarter gone by probably hasn't given that kind of an indication. But if you are okay with a 2-year kind of horizon, some of these CGDs will make sense. Some of the transporters like Gas Authority of India itself could be so promising that you can buy into this. So it's offering a good entry level with a very favorable risk reward. And it's good to know that people have started watching, P multiples going a bit out of whack. So that's something which is a very clear sign that there's some rationality coming into the market. But I think at 550 odd, it's definitely a good long-term bet. But you'll have to wait for 18-24 months for it to really deliver those outperforming returns.
That's Gujarat Gas, quite a dampener today in terms of the stock price action. By the way, since Nigel was talking about weekend plans, it got me thinking, and I started hunting, and some stocks caught my eye, so maybe it's a connect over there. Check out what's happening in the QSR space. A very clear underperformer category in the market in terms of stocks and earnings. Today is a very interesting sort of session. Restaurant brand Asia 5%, Devyani 6%, Jubilant Foods 3.5%, Sapphire Foods 2%, and even your McDonald's, Westlife Food up about 2%. So very interesting moves in QSR. Prakash, hi. Good afternoon. This is a Friday type question, right? Have to ask you about some fun stuff as well. So what do you think? I mean, is this, would you pay any attention to these moves? Is there anything that could be changing in the fundamentals, or is this, maybe some hunt for value? Because let's face it, QSRs have not performed in terms of earnings over the last couple of quarters.
Good afternoon, Surbi. So we've discussed this and coincidentally on a Friday. And I hope you also add Sula and United Breweries in the discussion at some point. But burgers, pizzas, QSR, by and large, is become more of a all-season kind of a thing. So what's happening is that earlier we used to rely a lot on festive times, on special events like the World Cup and all of that. But the ease of ordering, the kind of distribution strength that some of these brands have been able to make, get in place, have actually been responsible for a little bit of that oversupply of sorts. But remember, this is a phase where all of them have been investing. If you recall, when Burger King came with its IPO a few years back, it wasn't too off the mark in terms of where it's trading today. RB, that's Restaurant Brands Asia I'm talking about. It's still trading close to where it got listed. And if you see the store count that's happened post the IPO, it still hasn't turned profitable the same way Westlife took so many years to start turning profitable, because you need to invest into the network and the franchise for quite some time before things start looking up. But when they look up, you have a very significant operating leverage that comes out. So my sense is some of these will offer those opportunities. I'm not too much in favor of the pizza supplies, because pizza is going through its own reinvention in terms of losing ground in terms of all the new alternatives that are coming up. But I would believe the likes of restaurant brands would probably start doing much better. And as soon as it turns profitable, this recent high of 137 or wherever it touched will probably start looking like value as well. So it's just that the numbers haven't come in place, and that's why people haven't been able to put some sort of growth, trajectory around it. But that will happen. The commentary has been fairly decent, even in the past. I don't think there's anything alarming. Yes, but the demand side is still not taken off as much, and that goes for the entire consumption basket in affordable food and goods. So give it some time, but I think there's enough room for it to spark up.
Okay, all right. Prakash, I wanted to ask you about the defense space. That's coming back into fashion today. Good moves is what we're seeing on quite a few of them. What's your view on this space? And from the entire defense theme, what's your pick?
So, good afternoon, Nigel. So, today, of course, we had the DSE outcome, which was keenly awaited. And what it tells us is that the government's focus on spending on defense and across the board. It's not just certain segments which are more related to the naval side or the technology side in the artillery business. It's all across the board, which means that there's going to be this amount that they're talking about spending is significant. When it starts percolating down to the players involved, of course, the ecosystem is getting larger by the day, with a lot of new startups also coming in. But 80,000 crores is a significant catalyst to be able to kind of see, capital expenditure, capital formation happening within defense. But the current favorites of sorts, the HLs and the Bharat Dynamics and some of the naval names, they've already been priced with the order book in place. So my worry is that it's just that execution is going to keep happening. You may not see order books translating into inventory or into realization very soon. It's a very long haul. So given that, they will have to need some sort of a time consolidation. So I'm not saying they'll not perform, but they'll probably take much longer than most people are expecting. So the quick run-up you've seen in the last 24 months, and I'm saying quick because they didn't do much for quite some time, and the last 24 months, the catch-up has been very ferocious. So you'll have to give that time. So you look for niche names. There could be some names in the drone side which might start seeing a little bit of traction, which hasn't been there before. So you'll probably see some new segments and new names within those segments that could look promising. But at this point, we're not allocating too much money beyond what's already there.
Okay. I want to ask you about Federal Bank as well, Prakash. So I'll do that. We'll just take a quick commercial break. Have to do that. But we're back with more discussion and more questions. Prakash is with us. Stay with us.
Welcome back. 22,050 on the Nifty. It's a 140-point gain. Sensex up 400 points. This has been a very, very steady session. No sign of profit booking. In fact, there has been an upward tilt through the course of the day. Glenmark Pharma is also higher in trade. Came out with numbers yesterday, but the conference call was today and the management sounded upbeat. Vamakshi is here with the details. Vamakshi.
Well, yes, positive commentary came through from the management of Glenmark Pharma in a con call that was held earlier this morning. The decline in sales largely were attributed to implementation of a new distribution model as well as rationalization in the channel inventories. Now, excluding this one-time impact, the growth actually could have been at around 9% is what the management has said. In fact, in the fourth quarter, they expect the sales run rate to revert back to 1,000-odd crores for their India business. And in fact, India business is expected to grow at around 10 to 12% going ahead as well. Now, as far as the EBITDA margin is concerned, the management is also expecting a significant bump up out here. Some of the key triggers include reduction in their R&D cost. R&D cost reduction of anywhere between $45 to $50 million is expected next year. Apart from that, the ramp up in royalties is also expected to be a big driver for the margins. As operating leverage plays out, the EBITDA margin is also expected to see an improvement. Now, moving on to the company's Monroe facility, they are hoping to start commercial production from this facility in FY25 and are expecting to launch 2 new products that are expected to get commercialized in next year itself. Lastly, they also gave some positive commentary as far as their net debt, net cash position is concerned, with the amount that they will be receiving from the stake sale in Glenmark Life Sciences, which amounts to roughly around 5,600 odd crores. The company expects to be net cash positive by this year end itself. So largely lots of positive commentary coming in from the management, and on the back of that, Glenmark Pharma in focus today.
All right. Thanks very much for that. Prakash is still with us. Prakash, just a quick word on Federal Bank, if you can weigh in. So the news which, of course, came through, and these are reports, etc., that KVS Manian of Kotak Mahindra, is practically a lifer at Kotak Bank, is one of the candidates who actually may be in the reckoning to take up the top job at Federal. Now, again, Federal is a bank where we've had a very long-running CEO and MD. Now, what's your sense? I mean, could this be a bit of a re-rating event? Federal is one of those stocks which for years people have kind of said, you know, it'll re-rate. It's not happened. What's your sense?
Okay. So, you know, without getting into what would happen if Mr. Manian does get in, let me just kind of educate on where things stand vis-a-vis Federal and how the market's perceiving this. So, Prashant, the biggest challenge with Federal has been that they've tried quite a few things under Mr. Shyam Srinivasan's leadership, very ably so in terms of getting into the right segments, getting into branch expansion, trying to make sure that they are in the top league in the CASA build-up. But then, you know, growth is something which always has a lot of hiccups coming through, especially when you are a smaller balance sheet. Now, unless you get very actively into segments which are more promising, which help you suffice for the high margin, segments like personal loans and all, which probably, Kotak Bank has done very successfully in the past without compromising on quality, would probably be some sort of a DNA that could help Federal Bank with its large setup. It's far promising in terms of a setup, but somebody needs to kind of utilize that, sweat that out, start getting into some of the promising segments and use technology to bolster all of that. And remember, Federal doesn't have much of fee-based income, which Kotak has always thrived on. So there are lots of those pluses that could happen. So if that were to go through, it definitely is a win-win for the market, for the bank, all of that. But I have no idea whether that's going to happen or not. But it is something which is probably poised for a re-rating if these things were addressed. So instead of suppressing what's not working, the market's probably anticipating some sort of move to address those things which have been missing. So that's probably the explanation why there's so much of excitement in the last couple of days after this news flow was discovered.
Okay, that's a view coming in on Federal Bank. Done quite well in the last few months specifically. Okay, let's move on and talk about some more stocks that are in the news today. If you're looking at the price volume charts, the one that's really topping the list today is Dish TV, and it's not so often that we see this kind of a move on the stock, about 11% higher. Now, this seems to be on the back of a brokerage note coming in from CLSA. CLSA has put an outperform rating on the stock, and the market's taking note. We have Vivek joining in. Vivek, what is making CLSA bullish on Dish TV, of all things?
Well, you're absolutely right. Not a name that generally, the number one, we speak about too much, and number two, generally when we speak about it, the connotation is always slightly negative. But today, CLSA has written a note on Dish TV. So what they've done is they've actually reacted to the Q3 results. And Q3 results, they're saying number one, revenue are below estimates. And on the back of the weak performance, they've gone ahead and cut their FY24, FY26 estimates both on the revenue as well as EBITDA front by 18% and 37% respectively. But, they've retained their outperform rating, and in fact, they've gone ahead and raised the target price to 24 from 18 earlier. So what is the reason that they're quite bullish as far as Dish TV is concerned? Number one, they're saying that the stock is quite cheap at 8 times FY25 EV to EBITDA. Number two, a couple of catalysts. They're saying that in this particular space itself, there is an upcoming IPO and an upcoming fundraise from the DTH leader, that is Tata Play, which is owned by the Tata Group and also Walt Disney. So that they believe, any valuation there can actually lead to a significant positive rub-off effect as far as Dish TV is concerned. The other thing that they've highlighted is the fact that Dish TV became net debt free, in the first quarter of FY24. But of course, there are a couple of caveats that CLSA2 has highlighted. Number one, they said that the key catalyst could be the change in promoter ownership in the near future, and consistent profits can lead to a re-rating. Number two, they're saying the investment risk as per, or on Dish TV is the fact that the high number of promoter shares that are pledged, and that could lead to significant stock volatility. They're saying promoter deleveraging on a personal level would be something that could lead to a further re-rating of the stock.
All right. Vivek, thank you very much for that. So that's basically the call coming in on Dish TV. By the way, I just want to make a quick mention. The price target is for Dish TV. This is the typical 12-month price target is 24 rupees. Stock's at 23.65 right now. But it's interesting. I mean, for a broker like CLSA to write on something like Dish TV now after everything has gone through. Raj Mehta is with us, fund manager at Parak Financial Services. PPFAS. Raj, great to have you with us here. Thank you very much. And congratulations. I guess you guys celebrated Founders Days recently. Congratulations to you and the entire team there. You guys have been, of course, doing a fantastic job. Trailblazing returns. So investors are happy. And the question I think a lot of people are asking is, how does one continue to maintain those returns after the tremendous rally that we've had? Or should we expect a period of slightly more subpar returns? What's your sense? Not just for you, but as an industry.
Thank you so much, Prashant, for having me, and thank you for those kind words. Yeah, definitely we are going into a period where the return expectations should be tempered, given the stellar returns that we have seen in the last 2 or 3 years. The returns going forward would not be of the same scale or anywhere near to that. So definitely the return expectations should be tempered, and going ahead as the inflation comes down, obviously the nominal returns should also come down. So we have seen nominal returns for Nifty over a longer period of time to be around 12-13%, whereas the last 2 or 3 returns have been 20% plus. So we need to be mindful of that.
Okay, all right. Hi, Raj. Good afternoon. Good to see you, Win. Raj, just looking at your portfolio construct, the last sheet that I have that I've managed to find for the month of January, and you'll have rejigged the portfolio a little bit. So I wanted to ask you on 2 stocks. I believe EID Parry has been added to the list, if you could confirm that. And also ITC, you all were in early, but the stock has gone through a bit of a phase of underperformance. You'll have added further on that one?
Yes. So coming first to EID Parry, yes, we have added to the stock in both our equity schemes. The reason being that it's a holding company for Coromandel International, and it has a holding company discount. So given that the valuations that it was trading at, it made sense to add it to our portfolios. And coming to ITC, yes, we entered around COVID time, around 200 levels or even less than that. And we didn't add it for a good 2 or 3 years. But given that it has gone through some time correction and now some price correction as well, now it's started to enter into attractive valuation, and hence we have started adding again to ITC.
Okay, so that's a view on ITC. Raj, what is the view you are taking on domestic IT now? I mean, we all know about your US holdings that you still have. But what about local IT firms? If I remember correctly, I think you had HCL Tech in the portfolio, one or two mid-caps as well. So what's the sense now?
Yeah, so we have HCL Tech and Infosys to some extent in our FlexiCap fund, and in our tax saver fund we also hold Wipro as well as TCS. So the call there is that large cap IT names are better placed than the mid cap IT names, given the valuations that some of these mid caps are trading at. But at the same time, we feel that demand is very stable, and with the new technologies coming in, these IT services will keep catering to the enterprise clients that they have, and longer term trend of Indian companies catering to the global companies will continue for a longer period of time. The only question is the growth expectations that one has, and the valuations. So right now, large cap IT names are more in the reasonable zone. I would not say they are attractive, but they are reasonably placed. And mid cap IT, we feel that they are overvalued, and hence we don't have any mid cap IT names in our portfolio.
What about auto? Auto has been in the fast lane for the last 2 years. How long do you think this upcycle is going to last? And what about two-wheelers, where the growth has just started picking up over the last couple of months? Which segment would you prefer?
We went through a phase from 2018 to 2023 where we didn't see any volume growth for most of these auto companies, be it two-wheelers or four-wheelers. It was only about 6 months back that we started seeing some volume growth in most of these companies. And at the same time, with the raw material prices depressing, the margins have mean reverted to some extent for most of these companies. We prefer four-wheeler space over two-wheeler space, given that there is too much competition in the two-wheeler space, and electrification of two-wheelers and three-wheelers is happening at a more rapid pace than the four-wheelers. So we are right now positioned more in four-wheeler space, and we have Balkrishna Industries on the off-highway tire space. So these are the two auto positions that we have in the portfolio.
Okay, all right. Raj, just a request you to hold on to the thought. We have some comments coming in from Ajay Singh, the CMD of SpiceJet. He's saying Busy Bee Airways Private Limited and them, they have submitted a joint bid for Go First. The stock as it is was up close to 8%, and post this information that's coming in there, the stock has moved high. I think it's up now 10.5%. So keep an eye out on that one. And on the flip side, I'll be interested to see what happens to Interglobe, because post the shutdown of Go First, we did see that Interglobe Aviation did gain quite a bit. So now you have some more competition that's creeping in. Let's see what goes on that front. So I'll be interested to keep an eye on Interglobe. It's been a rank outperformer, the leader by a mile, but let's see whether or not there is some bit of a knee-jerk reaction on that one. For the time being, not really. Raj, I wanted to come back to you. A couple of other notable changes in your fund. I think NMDC Steel, where you all were in very, very early, you'll have reduced a little bit out there. But I think banks deserve a more important part. And as of now, I think 20% of your total portfolio is towards banks. You could correct me if I'm wrong, but I think most of them are, or all of them are private sector banks. What about the PSU banks? What's the view?
So yes, we have had about 20% position in the banking space for a long time now. It's just that we have, instead of adding more to Axis Bank, we have started adding Kotak Mahindra Bank about 3 months back. We don't have any PSU banks in the portfolio. Our opinion is that PSU banks over a longer period of time will cede market share to the private banks, and hence private banks are better placed than the PSUs. Also, PSUs have seen a good recovery because of the good credit quality that we have seen across the banks in the last couple of years. But we know that it's cyclical, and we are not too sure about the lending practices at most of these PSU banks. So we prefer private banks over PSU banks. PSU banks may be short-term trades here and there, but over a longer period of time, we prefer private banks over PSU banks.
Okay. By the way, I just want to go back to that SpiceJet story for a bit. The interesting aspect is that this move seems to be by Mr. Ajay Singh in his personal capacity, along with a different entity. a different airline entity that, that is being spoken of. This doesn't seem to be happening or routed through SpiceJet itself, where there are anyway concerns about liquidity. Remember, just a couple of days back, our colleague Madiha had done the story on delay in some salary payments, delay in some other kind of outstanding dues as well, by at least a couple of days by SpiceJet. So it seems that Busy Bee Airways and Mr. Ajay Singh, separate from SpiceJet, are going to be looking at this potential bid for Go First. Raj, I don't know. I know you have no aviation stocks at all. But just comment on this. I think this is something that a lot of people in the market grapple with, this huge surge in travel and commerce and the need to spend. Apart from hotels, is there any other way of playing it? Because obviously airline stocks have not been the biggest wealth creators. And, we don't have too many to choose from actually in the listed space in any case.
That's correct. There are not too many ways to play that. The only other play could be other discretionary goods like consumer durables or autos or something like that. But yeah, we have seen, as we have seen K-shaped recovery in the economy, we have seen the top 20% of the population spending a lot of money. And hence, we have seen a lot of demand in most of these discretionary names, be it travel, hotels, or even consumer durables and autos. So definitely we are seeing some pickup, but whether this demand pickup will be sustainable over a longer period of not, it's questionable. We feel that this is a short-term revival, given that there was a 2-year period where people did not spend too much. But yeah, it's a short-term revival, and we don't see it sustain over a longer period of time.
Okay, Raj, we'll leave it there. Thank you very much for joining us. It's a pleasure having you with us here. And thanks indeed for being with us on CNBC TV18. Well, 150 points higher is what we have on the index at 22,056. We'll take a quick commercial break here. We'll come back and we'll get you a quick check on what dealing rooms are saying. D-Street Chatter with Nimesh coming up. And of course, after that, a short-term trading idea. Stay with us.
Welcome back. You're tuned into Closing Bell, and we are coming to you live from the CNBC-TV18 Motilal Oswal newsroom. Well, just one quick clarification before we go to D-Street chatter. Focus on SpiceJet, and Ajay Singh is submitting this bid, this joint bid for Go First, but that is in his individual capacity. So just take note of that, in his personal capacity. The stock currently has moved up on very, very high volumes, but just want to alert our viewers. We'll try to get in Danish to give us, a quick update on that. But that's the important point in there. As of now, it should not have any impact on SpiceJet, right? I mean, we already heard about the troubles that they're going through. So just keep that in mind. The stock has spiked up, but just keep that in mind. It may not have any relation to SpiceJet, and he's doing it in his personal capacity. So that's an important point as well. But it's a Friday afternoon, last half hour of trade. Nimesh, tell us, what are you picking up in D-Street chatter?
Yeah, Nigel, good day for the markets, right? At record highs, and actually we hold on to the early morning gains, gap up. We've not given up any gains since the morning trade, so that's a good sign. And also to add to this, for a change today, the FIs are better buyers. So the flows are on the positive side. That's an interesting thing, After a gap up to see a buy flow from the larger FIs, that's a bit of heartening thing. But some signs of profit booking is clearly visible in the PSU basket today. And look at the OMCs. Despite such a large upgrade from Jefferies, all the OMCs, HP, BP, IOC, are of days highs, and there is a bit of profit booking now. And not only OMCs, but even in general with the PSUs, there are some signs of profit booking. So that's clearly visible there. The good part is the momentum in the broader market continues. So the mid-cap index is up another 0.5%. And a lot of pharma stocks have done well today. Not only the large caps, but even the mid-cap pharma has joined the party and have done really well today. So pharma as a sector stands out. And the other important highlight was for me, after a gap up, there is FI buying. So that's a bit of a positive sign that at least FIs are willing to chase even at record levels.
Oh, that'll be interesting to see them. Finally, they come back and showing some love to our markets. What about individual stocks, Nimesh? What are you picking up?
So, Nigel, in terms of individual names, the first stock is Data Pattern. We did flash out the data in the morning that there was a large block deal, 1,100 crores of size of block. But in terms of individual identities, I understand the foreign LPP was a seller, and it's a clean out trade, and that's the reason why that stock is up 10%. And in terms of buyers, the disclosures will come in the evening, but I understand one sovereign fund and a couple of domestic mutual funds were buyers. So disclosures would be interesting in Data Patterns today. So that's the first one. The second name is Senco. That's been consolidating off late, but this year the stock is up 12% and have done really well. Some domestic mutual funds have added the stock as well. Now I understand there's going to be a very large block deal in Senco very soon. The private equity investor is a likely seller there, so that's something to track. The third name is MCX, a bit of rebound in that stock as well after a bit of correction post that, one day when there was no trade in MCX for a couple of hours. Now watch out for any regulatory action, because there is a lot of concerns about some penalties on MCX. So that's something to track. And the other important trigger for MCX would be the new CEO, appointment of new MD and CEO. I understand the board has already identified a few names, and they're going to submit to the regulator very soon. So that's the next big trigger as far as MCX is concerned. And the last one is Tata Communications. Out of the blue, that stock is buzzing in trade today on good volumes as well. I understand some FI interest seems to be back, and the city is anticipating some corporate development as well in Tata Communications.
Okay, all right, got that. Thank you very much, Nimesh, for all of the action and the buzz from dealing rooms today. Well, let's go back and revisit that story on the revival and the efforts to revive, rather, Go First. We do have Danish with us right now. So, Danish, it seems that it's official that indeed Mr. Ajay Singh is throwing his hat in the ring, but in his personal capacity, along with a different entity, which is disconnected from the listed SpiceJet, right?
Yeah, that's completely right. And this development has come a couple of days after the NCLT gave a 60-day extension to Go First insolvency. So now, this is not the first time when Ajay Singh or SpiceJet rather showed their interest in bidding for the grounded Go First. But according to recent development, Ajay Singh in his personal capacity, along with Busy Bee Airways, has submitted an EOI for Go First. And they have also mentioned that they would like to go for a synergy between both Go First and SpiceJet, as Go First already has a lot of slots in domestic airports, also as well as in international airports, and they have a lot of international flying rights as well. Moreover, just before Go First was getting grounded, they had received the 50th aircraft, and they have over 100 A320 Neos on order. So this is a synergy that SpiceJet is looking towards to, and like almost 2 months back, we saw a major fund infusion in SpiceJet. So this has kind of given the airline a bit of confidence in order to sort out the financials and bid for Go First, which is grounded. So they have submitted their EOI, though the entire process process will take some time, but the news is that Ajay Singh, in his personal capacity with another entity, has showed his interest in bidding for Vaidya Group backed Go First.
Okay, thank you very much for that. This is a developing story and we'll be right on top of it. Rahul Mohinder is now back with us for a few BTST calls as we come close to the wrap of this trading day. Rahul, what do you have for us?
I think I'll go with some of the, the stocks which are heavyweights, but yet I think which can turn around. And I'll start with ITC, a bit of a contrarian call. After this big drop, what I noticed was over yesterday and today, we've seen a lot of volume that's kicked in between 400 to 406. So I clearly think there's some kind of a base building. Early to say if this is the absolute bottom, and that's always a tough task, but I can clearly see some signs of revival. So if you're a short-term trader and you want to get in now, keep a stop loss below 402, look at near-term targets of 411, following which even 418 is likely. So I think for starters, it does make for a short-term buy there. Axis Bank too, as I was telling you, my overall, bullishness is more towards the Nifty Bank. Axis Bank too is on my list. So with a 1050 stop, one could look at targets of 1105 to 1110 come in. So worth getting into that. HDFC too was on my radar and still is. I was hoping that we'd kind of clear 1425. And, post that we could make a bit of a good recovery. So I'm going to play a recovery within these beaten down stocks. And I think these are all heavyweights that can drive the Nifty towards that upper zone.
So obviously you think that HDFC Bank has bottomed out. I mean, the pace of the recovery, of course, will be different, but you think it's made some sort of a base, right? With what we've seen.
I think a short-term bottom is in place. I mean, it's a very tough thing to say that it's bottomed out completely. But I clearly think that, yes, short-term recovery is absolutely on the cards. And I think what's visible is more than the price action, one has started seeing some volumes kick in from the lower levels. And, that's where I'm trying to bet that in ITC or an HDFC Bank, I think they're clearly showing that little recovery. And, and traders would love that kind of a 4-5% burst in a short period.
Yeah. And what about Paytm? Any way to gauge this one based on price action? I mean, it's up 5 today.
I agree, but again, this is not something which I would jump in and buy, more from a risk-reward perspective. Do I think that there is follow-through possible? Yes, but the point is, I feel I'm not really in line with timing the stock well. But on the whole, yes, I think we're good for a little more on Paytm, but won't really recommend the stock as a buy, just keeping in mind the risk-reward.
Okay. All right. Thank you very much, Rahul, for joining in. You have a good weekend and we look forward to connecting again soon. Well, let's bring in our final guest for the afternoon on Closing Bell. Anand Tandon is with us to take us through the last leg, the home stretch. Anand, good to have you on. I want to talk about what's probably the stock of the week, at least from a Nifty perspective, and that is Mahindra & Mahindra. The stock has put on 10% this week itself. So much of excitement after the numbers. What do you think could be the additional triggers, and would you believe in it? I mean, there's a lot of talk about the SUV market share, which they're holding on to. A lot of buzz with their Volkswagen tie-up on the EV launches. Do you think there's more juice up here?
Well, given the current state of the market, clearly there is possibility of further upside. If you were to look at where as you mentioned, the two businesses or the main business which actually generates the upside for them is the SUV. And the question is whether you can be both bullish on Suzuki on the basis that Maruti is also generating a whole new bunch of SUVs coming out, and therefore they'll be gaining market share, while also maintaining that M&M will continue to maintain its market share because it's got a very powerful SUV portfolio. So for the current moment, it does look like they have a very long waiting list even today, and the numbers that they are putting out in terms of the volumes can be quite good. And clearly, the other advantage that I see in Mahindra is that it's not exposed to any global issues at all, unlike some of the other competition, where much of the business comes from overseas, and where the economies are looking far more shakier. So from that perspective, if you're looking at auto, probably Mahindra is one of the better picks.
Okay, all right. Hi, Anand. Good afternoon and good to see you. Anand, since we're talking about autos, earlier in the show, TVS Motors gone ahead and breached that 1 lakh crore market capitalization mark. Within the two-wheelers, what do you like?
Actually, nothing. I think there is just too much competition there right now. While there is some amount of segmentation about where each of the players is fairly strong at, I still think that it's a fairly tight market to be operating in. TVS, no doubt, has executed very well and done fantastically. But I think by and large, most of the companies are priced to perfection.
Okay, that's about the automotive space. Anand, at any point of time, should one consider looking at Paytm? It's a falling knife right now, but at what point do you think value could emerge?
There's an option play rather than anything else, because it's not a question of value. You are right now in a situation where regulatory action has brought the stock down, and depending on how the regulator behaves, if the regulator agrees that Paytm can go back to business as usual, it probably jump all the way back up. So it's really a probability that you're assigning to various scenarios, and it's always difficult to take a call on one or the other. At this stage, I would think that the regulator is not positively inclined towards the company. So I think, rather than trying to speculate on when, what, and if, it is better to look for businesses where there is clear business opportunity. And I think much of the finance sector is probably one of the areas where there is some value right now in the market.
All right, Anand, we'll come back in just a bit. We'll take a quick commercial break here. There's 10 minutes to go for close. Stay with us.
Welcome back. So it seems the Nifty has made up its mind. It's probably looking to go home above the 22,000 mark. And it's retaining that gain of about 110, 115 odd points. So we have time just for a quick, last few questions with Anand. Anand, so, where are you on the HDFC Bank debate now? I think this has been ongoing for a while. There's talk about obviously the value that is there, but then there's the bear camp that feels that the pain could last. I mean, that any improvement will probably take the next several months. What would your call be?
Certainly, it's not a momentum stock at this stage, but I think the valuation is such that for anyone who has got a 3-4 years view, you won't lose money from here. You'll probably make a decent amount. And it's probably the cheapest that it has ever been. So, yes, if you're a momentum player and this is a momentum market, if you want to put money away, I think this is for people who have got surplus beyond chasing the momentum. But certainly, it's a high-quality franchise, remains one. And I think it's only a matter of time. Now, the question is whether you have the patience to wait for the next few months or not. And the few months could actually turn into a few quarters as well. I'm not even putting that past. So only if you are looking at a 4-year, 5-year view, should you be looking at HDFC at this point.
Anything else in the slightly high beaten down names where quality is pretty solid? Any other names?
Well, I mean, it's not necessarily, there aren't that many sectors which are beaten down. But for example, specialty chemicals hasn't performed in the last 2 years. And many of the companies in that space, for example, have actually increased their capacities and put up a lot of capex. That capex is now coming up for production, actually. So some of the leading companies there, I think, probably offer an opportunity going forward. It also depends on your view overall on where the global macros are, because my own call is that, somewhere around close to June, July, you would probably have the first rate cuts in the US. So whereas the US dollar has actually strengthened in the near term, against that, you'll probably find that, if it were to weaken, as and when the interest rates cut happen, all other benchmark to US dollars will obviously rise. So, all kinds of metals, commodities, oil, gas, all of these which have made recent lows. Gas has come off a long way, for example, would actually give you a significant upside. So if you're looking at a 6-month where the puck is going to be positioned rather than where it is right now, I think some of these are places that one can look for value.
Okay, since we're talking about some of these commodity plays, Anand, again, BPCL, HPCL, a lot of the refineries, even some of the smaller ones, MRPL, Chennai Petro, they have had some very, very smart trading moves this week. Again, one hears this narrative about how if crude remains at 75, earnings will look better. Do you subscribe to the view? Would you buy any OMC stock now?
So actually, like I said, my view is 6 months from now, picture will be the opposite. Crude will probably be way higher. And you've already had a huge run in all these refining companies. So it would be probably, if you're really looking to take a bet on the position you should be in, perhaps ONGC. But problem with ONGC is that you have a situation where so-called upside is capped because of the government coming in and putting taxes on it. So you might be looking at gas companies as an alternative, because we haven't seen that kind of activity yet there, and that could provide you some upside.
Okay.
All right. Got it. Anand, we'll leave it there. It's a pleasure having you with us on CNBC-TV18. Appreciate you joining in with that quick view. So I think we're going to end 120 points higher, 22,000 plus on the index. So not quite at the day's high, but I mean, practically there is what you'd had to say. Just a quick sort of look at the big gainers, right? I'll just sort of run through the broader market gainers, and then we'll do the large caps the other way around. Let's just put these up. Natco Pharma, big gains today. You had Rain Industries, which went up sharply, has been up since the morning. There was GIC RE, which was up sharply. You have Glenmark, which looked up quite a bit. Of course, there's news there. Dish TV, that's CLSA sort of report, which Vivek was highlighting for us. New India Assurance, along with GIC, in the general insurance space, these two leading. Data Pattern, there was a block in the morning. Borosil Renewables is another one, which looked up quite a bit. Ipca Laboratories, perhaps we could put up. There was Devyani, I think we were talking about QSR early on. Uno Minda, even a sort of down and out name like Stovecraft. I mean, actually, business in terms of just volume growth, sales growth, etc. is struggling. We had the management with us earlier this week. That also was up about 7-8% or so. Lots of variety really. Skipper Limited was another one. There was Prestige which went up. Mastec was up sharply, and so on and so forth. PSUs took a bit of a backseat today. SJVN was down a little bit, and there were a few others, but that was the big volume-led pullback that we had. Surabhi.
Absolutely, new names on the mid-cap screen for sure, coming through to the surface. Let's talk about large caps. Not a bad day for the Nifty stocks either. The index is going to close above 22,000. 22,033 is probably where we are heading as the bell goes off. The sectors that work, there was a fair amount of rotation today, so it wasn't banks or Reliance, it was IT. A lot of the large cap IT names, Wipro 4.5% higher, Infosys about 1.5% up. Let's see how much TCS has done. TCS also up by about 0.5%. Tech Mahindra, some gains there as well. So mostly large cap IT looking positive. And the auto charge continued, led from the front by Mahindra & Mahindra once again 4% up. Bajaj Auto 3%, Maruti 2.5%, Hero Moto also, even Tata Motors, all of them tracking gains today. What else? There's L&T on the upside. There is Nestle and Tata Consumer, two names from the consumer side. Even Lever actually. So not a bad day for consumer stocks. So basically sector rotation, IT, auto and select consumer. What didn't work? PSUs finally saw some profit taking here. Power Grid, ONGC, NTPC, SBI, all of your top frontline PSU names were down between 0.5% to about 2%. And the biggies, Reliance not contributing, 0.5% down today. And Axis Bank, by the way, again ends in the negative side, down by about 0.5%. So the bell has gone, the week has come to a close, and the Nifty has managed to reclaim Mount 22,000. Well, with that, the team of Closing Bell is going to take your leave. Thank you very much for being with us. But do stay tuned, don't go anywhere, because we have Smart Money coming up next.